The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the September 10th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I am here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. If you've got a question, but you can't dial in, Stevie has got your back. Send me an email. Send it off early. Send it to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We've got a mixed bag out there as we begin our session together. You got the Dow down 172, S&P up 1, NASDAQ 100 up 32, Russell's off 11, semis down 19, trend is up 85. We've got gold trading out at 25.39. That's up about $7. Silver at 28.64, down a penny. Light sweet crude is 66.15. That's up $2.56. Natural gas up 6 pennies, 30-year Treasury. Pre-on at 126.19. That's up about a half a point. Our leader in the clubhouse, to the upside dollar-wise, is Equinix, up $26, a 3% move. A company called Research Affiliate Deletions. It's up 2,368% today. I think it started at zero, must be an IPO. It's trading out at 24.68. Sirius XM Holdings up $23, 868-point move there. Wow. Oracle's up 16, only 11%. IDEX Laboratories 13, just a small Peasley 3% move. To the downside, it is Goldman Sachs up 3.6%, $17 and change. Alta Beauty nearly 13.50, 3.5%. JP Morgan 13 bucks 6%. Lithium Motors down nearly 12 or 4%. Penske Automotive down 11. That's a 7% move. So we've got movers and we've got shakers. But let's begin our day by taking a look at a few things out here. First, let's begin with that New York Stock Exchange. It's advanced decline oscillator, still well below the zero threshold level. It's not in oversold territory. This tells us that the sellers are the ones with the edge. That's the same with the spot VIX index, which remains above its 50-day exponential moving average. The 50-day is priced at 1745. The VIX trade at 1964. If we do get below yesterday's low, and yesterday's low in the spot VIX is at 1929, that would add some fuel to the fire that the VIX is headed lower, targeting that 1744 level, and that would lead to a further rally in the S&P 500. If we take a look at equity futures, so today is potentially about forming new profiles. Now, things have shifted. As an example, at about 7 o'clock this morning, there was a new profile that was trying to form in the Dow equity future contract, bottom left. It's no longer there. What do we know about the Dow? The Dow is dealing with the center of its profile at 49.35. If price can close above 49.35, that would be a signal and a suggestion that price would go target 41.439. If we take a look at the ES Mini, it has a new profile that is lining up with my white background chart. So I'll flip back and forth so you can take a look at that data. Their support or your buy zone here is between 54.49 and 55.04. That level 54.49 is what has, you didn't see it because you weren't looking at the newsletter this morning, or maybe you were, but that has now shifted and is matching our white background charts. Where it's off right now is at the top of the profile. And on this black background chart that you're looking at, it's at 55.87. The white one is at 56.69. The interesting thing about that, which one is right? I don't know just yet. And they're both right. So we use both sets of data. But if the white background chart, again, you're not looking at it, I'll put it up on our screen here in just a bit. If that's the case, this tells us that we should expect a consolidating market on the daily time frame, because that profile would be wrapping around the prior profile. You'll see that momentarily. If we take a look at the NQ, you can see you've got that descending trend line. It's also forming a new profile. That new profile has support at 18,475, the center 18,881, and the top is at 19,693. And that is tying into exactly what we have on our white background chart. So if the NQs are going to head lower, you need to see a close below really two different levels. One would be the bottom of the profile, 18,475. The second would be the TD9 count breakout level, just below that at 18,383. Finally, the Russell 2000. The Russell 2000 it is going to form bar number 8 of a TD9 count today. No new profile. Its profile has shifted. It's doing this at its breakout level of support, this being a potential TD9 count bottom. So let's go change our screens now. Let's go over to the white background screen and take a look at those charts. So here's also the daily equity future contract. Again, you'll see on the ES Mini, you'll see it even better if I expand the screen out. So let's do that. And that new profile, if you just look at the on the right-hand side where we've got the numeric values at, you can see that the black shaded levels, those are representing the profile areas out there. There's one that's also identifying price. So 54.49 to 55.04 is the so-called buy zone. More buyers are down there, and the sellers are residing at 56.69. If that ends up being the true profile, well, that says, hey, prepare for a consolidating market, which is the same thing that the weekly chart for the NQ has shown us as well. So maybe, anyways, that's the message of the market so far for the ES. Let's take a look at the NQ. The NQ, you can see that profile. Now, this does not wrap around the prior profile. On rallies, by the way, if price is able to get above these center lines out there, the next resistance level would become those oscillator and change lines. So 55.43 in the ES, and at present time, 19.011 inside the NQ. The Dow does not have a new profile. Was trying to earlier, that's gone away. The same thing with regard to the Russell. Now, in the case of the Russell, it will form a TD9 count bottom pattern tomorrow, as long as price closes tomorrow below 2137.60. Today, price needs to just simply close below 2149.80. That seems like a likely outcome there. So we are getting the bottom signal inside the Russell 2000 for its daily time frame out there. The other interesting patterns here, I don't know if I have those charts up on our screen. I don't, but I'm going to put them up here. We'll wait just for a moment for these to populate. And that is at the NASDAQ Composite. I believe that is also in the process of forming a TD9 count bottom pattern out there. Not the NASDAQ 100, the NASDAQ Composite. And that will populate here shortly. That's the bottom row, second from the left. You can see that it's actually completed a TD9 count bottom. I did not realize that. So the NASDAQ Composite, it is the only cash indice that has that pattern at the moment. You can see the Russell 2000, we have ticked below the low from 2 days ago. Today is going to become bar number 8. So tomorrow, price just simply needs to close below the close of bar number 4, and that would be at 21.45. So you're going to get two cash indices with TD9 count bottom patterns. At this stage here, I take that back. Well, I've got the XAU in there, which we also know has a TD9 count bottom. In this case, price should rally towards their daily oscillator unchanged lines. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Hey, one thing, if you caught the end of, I filled in just at the very end for Tom's show yesterday. What I was sharing with folks was at that stage at 4 o'clock, just before 4, we were looking at that spot VIX index because it was trading below a minus 10% one-day rate of change out there. The actual closing percentage yesterday was minus 13.09. Now, when the spot VIX generates a one-day rate of change below minus 10%. You and I were often talking about the ones that are above plus 10%, but below minus 10%, you get a green arrow. What's that green arrow? Well, I've identified that when that happens out there, that's an initiation to higher price. And that initiation to higher price seems to have worked better when the market has made some kind of a low out there, or at least with the market moving lower. So this is suggesting odds favor that we should see the S&P 500 continue to rally. Now, the thing to be watching today is still going to be that VIX symbol. That would be the indicator. And if we start trading below, again, yesterday's low at 1929, and right now we're at 1945, that will add to the idea that we should see a further bounce or rally inside the S&P 500. And that rally could come to an end today. You know, we usually get in a counter trend move, a 2 to 4 bar move out there. I'd say with an initiation signal, if everything plays out to fruition out there, then it becomes more than a 2-day rally, more likely that 4-day rally out there. So I wanted to be able to share that with everyone. Let's go take a look at the play-by-play, the shorter-term time frame charts, at least for the ES mini. So let's just stay with the theme of the S&P, simply because of yesterday's signal with regard to the one-day rate of change below minus 10%. So in a moment, we'll put up those white background charts again. We're doing okay so far, not screwing things up too badly sadly. Upper left-hand side, the daily time frame, you and I don't need to speak about that. If we look at the 300-minute, the 5-hour chart, you've got a TD9 count bottom. You've got a price trading right now. Well, it closed above at 9 a.m. It closed above the center of its bullish structured profile. If we close above that at 2 p.m., by the way, that being 54.92, let me just make sure. 54.92. A close at 2 p.m. above 54.92 is going to increase the odds of a move in the ES Mini to the 55.40, 55.57 level. This is a 5-hour time frame chart we're looking at, right? So you only have, 5 of these sessions basically. So when I say it's going to make a move to 55.40, I'm not saying it's going to do that overnight. If we look at the 4-hour time frame chart, the potential for a TD9 count pattern, what needs to happen is this candle will close at 2 p.m. as well. And as long as price closes above 54.8275, that will suggest that you've got a TD9 count top and the price should pull back towards the 54.49 level. So a different message than we're getting with the 5-hour time frame chart. We've got to let these candles play out to see if these patterns actually take hold. On a 2-hour time frame chart, by one tick, the ES Mini negated a TD9 count top out there. So that suggests a move up to 55.32. The pullback that we've seen so far has been nothing more than really a test of support. So the 60-minute time frame chart struggling at the TD9 count breakdown resistance level of 54.99 and a quarter. New price trading right now inside its profile that has supported 54.66, resistance at 55.01. Now that is a profile that's wrapping around the prior profile. Maybe this is communicating to you and I that we're just going to have a choppy day out there. So that's what its message would be on a 60-minute time frame. No other really substantial signals coming from the other time frame charts out there. So here, if we take a look at the ES Mini and its daily time frame, again, just the normal course of if let's assume. Well, we don't have to assume anything. We're in the unfavorable seasonal time period that suggests that we move lower. We've got daily, weekly, and monthly topping patterns out there. So the assumption is we are in a market, we're in a seasonal time period where it's the most negative seasonal time period. So everything is flowing to the downside. But we have to see what happens on this first rally. Is it just a one-day wonder? Is it a normal 2-bar knee-jerk reaction? But it's really a 2 to 4-bar knee-jerk reaction high that can form out there. So we want to keep track of what's going on with the daily profiles, oscillating change line, things of that sort. So is today just day number 2? Possibly out there, but we should at least get that based upon the signals from yesterday. So just kind of keep that in mind as you are trading on those intraday time periods out there. Let's spend some time starting to look at the requests that have come in. The first one coming in from Dano this morning, and Dano wants to take a look at the retail banking sector. KRE is the ticker symbol out there, and KRE, when we take a look at its daily time frame out here, Dano, the first thing to notice is this formed a TD9 count top. Price is trading now back below the top of its profile, 55.06. Looks like it wants to go target 53.69. That is where that TD9 count pattern broke out from. If price were to close below 53.69, you would have potential support between 51.44 and 53.25 out there. The weekly time period shows that price has lost momentum. It's only Tuesday, it's not Friday, but it closed below that green oscillator change line would give you that signal, and that would suggest that, okay, we should pull back towards 52.69 to 51.34 out there. Watch 53.69 on any moves lower. That's what's going to assist you with that overall move. On a monthly time frame, everything looks bullish. So it looks like we're in for a period of time, a short period of time perhaps, with regard to price continuing to pull back out there. No other bottoming pattern on the daily time frame, weekly time frame, monthly time frame. So now it's all really about support out there, Dano. You're short. I'd say stay short at the moment. Watch 53.69. Now, if we take a look at the 30-minute time frame chart, let's just see what kind of signal we have out here, if anything. Nothing to suggest getting out of that short trade by any stretch of the imagination. If we look at the 65-minute chart, same pattern there. So we're going to stick with staying short, but I do have to say, as price approaches that breakout level at 53.69, look to your intraday charts, Dano. See if you see any kind of a bottoming signal. If you do, well, then you would be looking at some type of a rally. That rally could take it to 55.06, 56.48 type of an area out there. But Not saying that's going to happen just yet. We need to see what takes place around 53.69 and what patterns are forming on those intraday charts. Hope that helps you out. As always, thanks so much for the requests and getting us kicked off this morning. Jack would like to take a look at wheat futures. So let's go take a look at the Stevie's 8-panel set of charts there, see if we can provide Jack with pretty decent information as to what wheat is signaling to you and I. First, if we take a look at, let's start with the 30-minute time frame chart. Let's go lower right out here. That way I'm giving you exactly kind of the play-by-play of what's going on right now, right at this minute. What is going on, Stevie? Well, you've got a TD9 count top, and it is successfully at this moment in time at 11:25 in the morning taken price right back to its oscillator and change line. So as we speak right now, we have an overall neutral signal on a 30-minute time frame. If price were to close below 572.75, then we'd see a move back to 569.90. We would avoid that neutral signal, and that would suggest lower price out there. So far, TD9 count top, price is held, it's neutral out there. Now, if price does take out today's high, that suggests that this is going to rally much further. Today's high, 578.50. The 60-minute time frame chart out here ran into resistance at its TD9 count breakdown level. Yes, it closed up for 1 bar, but that was it. It was just a 1-bar wonder out there. 120-minute looks bullish, trading above profile resistance. 240 needs to close above 574.60 to continue its breakout message. We'll finish looking at the wheat, the December wheat contract for Jack inside the Tiger's Den as soon as we return.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at cyber out here. I'm sorry, we're at cyber. That's going to be next. We're looking at the December wheat contract. This is for Jack inside the Tiger's Den. So, Jack, let's just get to the daily time frame. Take a look at the soup and nuts out here. So we can see that this formed a nice Rhodes momentum indicator bottom back on August 27th. Rallied up to a high out here on September 4th. That's at 582.75. Now, I don't have any idea at this stage why price stopped there. But what we can take a look at out here is if you use the high from July 5th, and you take that high and you just simply attach it to the high from September 4th out there, what you'll see is today, even 2 days ago, that is where the rally ran into resistance. So that descending trend line is an important level for you to be looking at out there. Now, what you'd really love to see is both today and tomorrow, price not even tick above the high of bar number 5. The high is 582.75. Why? Because if you do get a tick above that, then you're going to have a TD9 count topping pattern out there. And at this stage here, with price trading above profile, this is a profile that formed yesterday, and the resistance level out there, which really is support at this stage, is at 557.95. So that's where you've got support. You'd love to see this stay above profile resistance, above its oscillator and change line, and not have a TD9 count top. So you're not looking for wheat to do much really until, you'd like to take this thing to take off maybe on Thursday or Friday out there. So everything looks pretty good from a daily standpoint. And from an intraday piece of, the 30-minute chart looks pretty good. But, whether that moves lower or not, you've got support between 567 and 569 out there. So that's what I see when I take a look at the wheat futures contract. Jack, I hope that helps you out. As always, thanks so much for your request. Let me shut this down here and get rid of this. And then we have a request from Mohammed to take a look at two ticker symbols out there. The first one's going to be cyber. So we'll get to that here momentarily. You might want to pull that up on your screen as we go through the analysis. So we take a look at cyber. CYBR is a ticker symbol. Trading right now at 54.28. It's got a TD9 count top. It's targeting its breakout support level at 53.69. If we were to break through that level, it has support may have support at 53.25 or 51.44, the bottom of its daily profile. On a weekly time frame, is there a sell the D point top out there? Yeah, I could certainly make one. But what's more important here right now is if we take a look at what price is doing, which Mohammed is trading with inside his profile level, it's a bullish structured profile. Price right now is trading below that green oscillator and change line, 54.80 as a number. A Friday close below that green oscillator and change line will tell you and I that it's lost its momentum. You don't see the chart? Yeah, well, I don't know what to tell you. It's actually up there, Mr. Bill. See if it's in Tiger TV. So it should be up. It's a white background chart. Oh, it's KRE. What? I'm looking at KRE. Thank you. Thank you, Mr. Bill. Don't worry. I'll eventually get it. Now we're going to take a look at cyber. Okay. So, the last minute and a half or so, just delete from your brain. If you can, I'm certainly going to try to do that. Here now we take a look at cyber. What do we have? We've got a TD9 count top. At least we got that one right out there. Price is targeting its breakout level at 256.50. If price were to close below that breakout level, then where are we looking at? Well, if we look at the weekly time frame chart, which has a Rhodes momentum indicator topping pattern out here, price below its oscillator and change line, a close below 256.50 should lead to a move towards 248.99. And 248.99, Mohammed, is the bottom of its new weekly profile that formed last week. That would be a key level of support. If price were to break through that, close below that, then we could be looking at a move all the way back to the 205.59. We got to take this one step at a time. Is there another potential area of support on a further move lower? And the answer to that question is yes. And that's at about the 254 level. That's coming from the monthly time frame. That is its oscillator and change line. So, Mohammed, I'd say in the case of cyber, the daily and the weekly are definitely suggesting lower price. The monthly is just simply going to go along. Watch that 254, 256, 248 level out there. That's what I see when we take a look at cyber. Now, this one I'm going to get right off of the bat, meaning we're going to be on the right chart as we start to talk about CDNS. So we take a look at CDNS. This is trading right now at 254 and change. Yesterday, this went ahead and confirmed a Rhodes Momentum Indicator bottom for its daily time frame. Today, it's forming a new profile, and that new profile has got support in the buy zone between the 248.01 and 250.56 level. What price is doing right now, as you can see here, Mohammed, it's running right into resistance, that red oscillator and change line. So it is not out of the woods. Would it be out of the woods if it closed above it? No. Why? No, because it formed a new profile and resistance at 258.23. So if Cadence Design Systems is truly going to get any traction to the upside, we need to see this close above 258.23, the top of that daily profile. On a weekly time frame, all I have is price getting back and testing basically profile support level out there. So nothing that's going to impede this moving higher if the daily can take out the oscillator change line and the top of that daily profile. On a monthly time frame, price is pulled back into a buy zone. That's between the 237.08 area, 237.08 up to 257.14. So that's what I see when we take a look at CDNS. This looks like if you can close above that 258.23, you're going to have some action. That action, by the way, could take you all the way up to the prior swing point. That's in the 287-ish type area out there. 278, the 281.79 is the top of the weekly profile. So that's what we've got for Cadence, Mohammed. Hope that helps you out. CKP inside our Tiger's Den has an interest in taking a look at what the 30-year Treasury is doing. So we're going to get to our 8-panel set of charts out here. See if I can get there a little bit quicker for us. And here you go. Voila. If we take a look at that monthly time frame chart here, CKP, you can see prices trading. That's the upper left-hand panel out there. You can see that price is trading into a sell zone. That's created. That's between about the 126.01 to 131 level out there. On a weekly time frame, things are bullish. Let's open up the chart here. Why are things bullish? Well, I take that back. Price is running into potential resistance. That's its TD9 count top. If this week price can close above 126.07, and we're at 126.21 right now, it'll negate that signal, and you would see it move up to 120.02. 120.02, not that that's necessarily a top, but getting back to the breakdown resistance level can in fact be a top. So we may not have a pattern, but that's likely where price is targeted, that 129.02. Now, what we can see out here is, let's just expand this out, is that you would also today potentially generate an A to B equals CD pattern to the upside. So let's just copy and paste that A to B leg. Let's try to copy and paste it. There we go. Let's move. I don't want to move the chart. Let's move the line. There we go. So here then, so the first thing you're looking at, the TD9 count top from December 29th. That high, 126.07. We're trading above it now. Let's assume we close above it. Well, you're going to trigger an A to B equals CD pattern to the upside with a price target in the 132-ish range out there. But you do have that resistance at 129.02. That's what the weekly chart is telling us. We come back from this break. Let's continue looking at the 30-year Treasury. We'll look at the daily next.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Still got a mixed bag out there. We're looking at the 30-year treasury for CKP. Hey, CKP, in the during that break, I noticed that on the 30-year for the monthly and the weekly, I'm using the continuous contract. So we're going to switch. I gave you a number to pay attention to with regard to a signal that this thing wants to rally further. We're going to go to the actual December contract. And on the daily time frame, the trading day of August 5th was really the trading day of August 6th that identified the sell the D point top out there. It was a 3-river evening star pattern that makes the high of that candle formation, which is at 126.30, the key level of resistance. If price were to close above that, doesn't have to be today, tomorrow, whenever, that will trigger the A to B equals CD pattern to the upside out there. So that's what I'd be looking. Odds favor that that's at least going to be tested. Why? Because price above green oscillator and chain sign and is above profile resistance. So you're above all resistance. There's no reason for it to not continue to rally up, at least to that level, maybe take it out. If we look at a 5-hour time frame chart, there's a TD9 count top out there. That's at the 126.26 level. So if price closes above that, it negates that signal out here. We don't see any kind of topping patterns on intraday charts out here. None. That TD9 count that I was talking about on the 5-hour chart was from back on September the 6th out there. So we're at the 10th. So no, and then a current move to the upside, no topping signal. So that high is going to get tested. If it gets taken out, then you've got the A to B equals CD pattern to the upside. So I hope that helps you out. You also want to look at Mr. Yen out here. So let's go take a look at those charts. I'm going to go ahead and close these down. This will take just a moment. The yen charts are not going to populate immediately, but they will shortly. I'll get to that right spot. And we'll take a look at my set of charts that looks at the euro for the daily, the euro, the yen, and the pound for the daily and the weekly time frame out there. Here we go. Left-hand side is euro for the daily time frame, represents 57.6% of the weight in these three currency pairs, represent 83.1%. You specifically wanted to focus on the yen, so let's do that. Let's look at the daily time frame. The yen representing 13.6% of the weighting inside of the U.S. dollar index out here has got a TD9 count top. That formed back in July, and ever since then, we've been moving lower. Now, we did get a TD9 count bottom. Got two of them. You got one that formed on July 24th. That led to a sideways movement for about 4 or 5 sessions out there. And then the doors opened and this moved quite a bit lower. The bottom came in with a TD9 count bottom out here. That was on the trading day of August the 5th out there. That low is likely to be tested. That low, by the way, is at 141.69. If price were to take that low out, you'd have one gargantuan A to B equals CD pattern to the downside. Let's not look at the daily time frame for that. Let's go look at the weekly time frame. The weekly time frame has a Rhodes Momentum Indicator topping pattern, and if price closes below the low from back in August, that low being 141.69, if price closes below that low, what we're going to see here is a very large A to B equals CD pattern that actually takes the yen all the way back to the January of 2023 timeframe. Now, I am not saying, CKP, that that's what it's doing right now. What price is doing is targeting that area that if it's able to break through is going to go ahead and give us that piece of information. So that's what I see. We take a look at the Japanese yen. We could take a look at the Japanese yen and put it on some intraday time periods as well, just to give you more of a play-by-play. And what we see out here is we see a negated TD9 count bottom pattern that formed at 10:30, an hour and 15 minutes ago. We are trading below a breakout level at 142.72. What's this say? This says lower price. Now, as price is moving lower, the yen is getting stronger. The U.S. dollar is getting weaker. We take a look at this specific chart. This tells us that price should go target its breakout level at 142.07 out there. That's on a 30-minute time frame. Let's try a 60-minute time frame. See if we got, what do we have here? And on a 60-minute time frame, we're trading below its breakout level of support at 142.70. That is a suggestion that the yen should continue to get stronger, meaning that it should continue to move lower out there. So you could be getting quite a signal out here. You got to wait for it to actually form. But that's what's going on when I take a look at the Japanese yen. So CKP, I hope that helps you out. Let me take a quick peek here. Is there anything inside the Tiger's Den for a request? So there's nothing that I see, but if you are listening in and you do have a request, please go ahead and, oh, that's great. Delta plane clipped another plane and knocked off its tail at a taxiway up at the Atlanta airport 4 minutes ago. Probably not good for any of us to hear that, because most of us, certainly if you're in the South and you're headed somewhere, you're flying through Atlanta for the most part, especially if you're going overseas. So I do have a question that has come in. So let's go ahead and get to that set of charts out here. And this is coming in from Nicholas. And Nicholas wants to say, look at, would you please go over gold in the low of the day? Sure. So let me put up the December contract right here. Whoops, not Z. And this set of charts here. I'll put up gold. So it says, good morning, Steve. Missed your early review. Would you please go over gold? It hit a low of the day and started to move up. Thank you. Have a great day. Oh, he's leaving for Europe tomorrow. Perfect. For 18 days. Oh, man, that sounds wonderful. Taking your laptop to that. Well, wonderful. Keep in touch with us while you're over in Europe. Send a photo or two. So we take a look at the gold contract out here. It gets kind of scary. The scary piece of this is you've got a TD9 count top on the daily, you've got a TD9 count top on the weekly, and a TD9 count top on the monthly chart out there. Now, on a monthly chart, at the end of the month, or at any point in time, this price is able to close above 25.3770, which we're trading above right now. But that doesn't matter. But it's got to close above 25.3770, negates that signal, says we continue higher. In the case of the weekly time frame chart, price would need to close above 25.7040 in order to suggest, again, that we continue to move to the upside out here. What we really have going on right now is a consolidation on the daily time frame. And Nicholas, that ranges anywhere between, now I'm going to give you the range, although price not gotten down to the bottom of this range, the bottom of the profile, which is 24.79. The real range out here for the last couple of weeks is between the center of the box. Now, this is a slightly bullish structured profile, so that would make sense. In other words, price is finding support or is consolidating at the price levels between 25.0970 and 25.6030 out there. So what was that move lower? I'd really have to go to some intraday charts to try to figure that out here, but we just have a consolidation. Resistance on the daily time frame, 25.50, which is the oscillator and change line, and above that would be 25.60 out there. So what else can I share with you on gold? So you were talking about a move lower this morning. Let's put up a 30-minute chart here. Let's go get a feel for what it's doing. So with regard to Goldilocks, this 30-minute time frame, I'm assuming that you were talking at about 10:30 this morning. What was taking place, now I don't know what topping signal, if any, was present on an intraday chart, But what price did was it pulled back and it tested and rejected its breakout level support. And that was at 25.30, 10 out there. So nothing broken as we speak. Now, it's taking on another breakdown, a support level, breakout support level. Does that become resistance? That's not how I trade it. Resistances are the green lines. That's the true breakdown level out there. So at least we know at least why did price stop where it did. It's where price had broken out from. You've heard me say even if you don't have a bottoming pattern, it can be a bottom just simply coming back to that breakout level. So best of luck to you on that trip. Do I have those currency charts still open up here? Let's see if we do. Euro, yen, pound. So if we take a look at the euro, if the euro were to close today below 1.1026, that will trigger an A to B equals CD to the downside pattern, but price trying to target 1.091. And that would be a beautiful thing for you. Steve Rhodes with TFNN. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Real estate sector. This is for Dave. Dave, hey, your last name. I have a brother-in-law with that exact same last name. Maybe we're related out there. In any event, we take a look at the XLRE. It is on fire, and I don't see that fire being put out. Maybe that fire gets put out, or the blaze kind of settles, and while the firefighters fight it, so to speak, come maybe between tomorrow, Wednesday, and Friday, because you couldn't get a TD9 count top on the daily time frame. Today is bar number 7. It's got a Rhodes momentum indicator signal triggered. It's negating a prior Rhodes momentum indicator top out there. The weekly chart looks bullish as all can be out there. It isn't an A to B equals CD pattern to the upside. It's attained the 1-to-1 level. Doesn't mean it can't go higher out there. And that would require a bearish reversal candle to confirm a sell. The D point top, and on the monthly time frame chart, this suggestion wants to move to 50.97. So this ETF, this sector inside the S&P 500 is truly off to the races to the upside out there. So watch for a bearish reversal candle, maybe by Friday, a TD9 count top. Now, the largest component inside the real estate sector is Prologis Inc. Ticker symbol there, PLD. It's got about an 11% weighting. Again, what we see here is really a replication of what we looked at when we took a look at the XLRE. This, however, though, profile levels, resistance points are a bit different. So in this case here, for Prologis, on a daily time frame, the only topping signal here would be a bearish reversal candle. So I would watch PLD. We talked about a potential TD9 count top for the daily time frame for XLRE, and not that that might not happen out there, but here the number one weighted, almost 11%, is saying, I don't see that, Stevie. So watch for a bearish reversal candle. The weekly chart says Prologis wants to go up to 135.76, and at 133.43 is a level where on a monthly time frame you are likely to find some resistance out there. So folks, we are off tomorrow because the office is being moved, so I will not be doing a show out there, but I will look forward to being back with you on Thursday at 11 a.m. Sounds like to me Wednesday is going to be a golf day for Stevie. Take care, folks. Have a terrific Tuesday, and I look forward to seeing you on Thursday.